Freddie came out with some clarity last week saying that you always have the option of adding them to the end of the mortgage, and then there should be no penalties or fees charged, because that's how the CARES Act was written. So I think that clarity might be helpful for some people that really do need forbearance. There is a whole guide at the CFPB, and there's some videos that the CFPB has that people can watch and listen to if they have questions about it. But it should not be a difficult process. It should be a process that they should be able to do actually online without waiting hours on the phone. So if you really need forbearance, the way it's been set up, if you can add the payments to the end of the mortgage, which is great news, then I think that's the message that maybe has not been clear in all this from what I've been hearing.
Yeah, I agree. I think that's that Fannie and Freddie coming out was huge to clarify things, because I had clients that would call up and they said 90 days and that's it. Their lender did, and the others said 6 months, a year, and nobody really had any clarity. And the idea of having to catch up for or pay 4 payments all at once after skipping 3. Well, if you couldn't pay the first 3, who's to say you were going to be able to make that 4th? So putting it on the end of the loan is a great opportunity for people. I think the issue we're probably going to see as lenders is, how does this play out 12 months from now, a year from now, as far as, because there's going to be a coding that's put on their credit, a note, not a blemish on their credit, but a note that they went through. I think it's affected by natural, so it's something like affected by natural disaster, and which will signify the forbearance, which I know some investors are going to look at that, and 12 months after you're making your payments, regular payments on time, is when you can look at doing a mortgage again. So that, how that plays out, I think, is going to be important down the road.
Yeah.
And I know yesterday, 2 days ago, I had a client that was with a bank I will not mention, and we pulled their credit for a refinance, and it came up with that note in their account on their file. And I asked them, hey, have you filed for a forbearance or anything? No, we haven't done it. They reached out to their lender, and the lender put that on everybody's account, put it to the credit bureau for everyone. So their name has a flag in it, so be careful if you have a client that has a loan with them. And I think this is going to be important for agents going forward to maybe make sure they check in with their lender for sellers to make sure that, once again, a bank hasn't put that on their credit record, even though they never filed, never requested, never even talked about a forbearance. CarMax is another one that did that as a blanket on everybody that has a loan with CarMax. They had put that statement on there. So kind of, I know they're trying to help, but not helpful from a lending standpoint.
So what does someone do if they find, so let's, Roy, take your example. If they find that they've been flagged and they've not exercised use of the forbearance, what do you do?
Well, our guidance has been that we need to go to their current they need to go to their current mortgage company, get something in writing clarifying that they did not file for this forbearance, and that it was something that the company placed on all of their accounts. Some type of clarification from the lender to verify that, because the issue we have is that the end investor is not going to want to buy a loan that's in forbearance or is coded as it's in forbearance. So, and that's where we're, as lenders, running into issues where we're trying to verify the day of closing, are you still working? And we have to be very careful on, if it's somebody that thinks they may be laid off, or this is going to affect their income, and we want to make sure that someone isn't going to file forbearance after closing, because we could get stuck with that loan because the end investor is not going to buy it.
Right.
Or at least there's not clarification that end investors are going to buy it right now. So.
Talk about yourself. What are you seeing right now, sir?
Yeah, I have a very unique perspective on forbearances. I don't believe in them because I feel like people out there just take advantage of it. People are like, oh, I don't need to make a payment. Let me just apply for this forbearance. And it's a domino effect that really screws a lot of things up, not just for the lender, but it's a domino effect for servicers, investors that buy these loans. You guys are probably all hearing about, guidelines being tightened up, down to 640, 620. Chase went out there and just publicly announced that they don't want to do loans unless it's a 700 FICO, 20% down. So when someone like myself, that I'm still doing true guidelines and I'm still lending down below 580 credit scores, and people could literally just call the servicer and say, hey, I'm impacted by COVID, I need a forbearance. That creates a big domino effect of losses that if it continues, I'm going to get to the point where I don't want to do these low FICO scores if everyone's just going to call and do a forbearance.
Right.
I'm seeing a trickle effect of new loans that we just closed. People haven't even made their first payment that are calling in for forbearances. So it's one of those things where it's tough because some people are truly impacted, truly need it. And then you got another set of population where people are just calling to take advantage, thinking it's a break, it's a free pass when it's not. And then just to clarify, there are two things. There's a forbearance and there's a deferment. Those are two different things, guys. The deferment is where you add the payments to the end of the loan. A forbearance is where you get the break, like Perry described. Hey, you need 90 days or 6 months worth. That servicer is going to expect all of those payments to come due once that forbearance is up.
Mm-hmm.
Yeah, and I think one good thing Doug brought up is that it doesn't seem like it would affect lenders, but on the back end, the servicers are on the hook for, if somebody goes into a forbearance for 6 months, that end servicer is on the hook for 6 months worth of principal and interest payment, taxes and insurance. A big servicer with lots of loans can't afford to make all of those monthly payments. So that's there are side effects that could change our guidelines, could change rates because of a servicer or an investor's appetite to purchase loans when you've got 4 million, 5 million people filing for unemployment. That's where people come in and ask, well, why are rates higher? Rates should be better. Well, sometimes there are outside effects that are affecting our interest rates right now and programs.
So that's an interesting question. Are you expecting then an increase in rates? I mean, I know that's a crystal ball question, but I'm just curious, is that what you would be expecting?
No, I don't think an increase in rates, but guidelines changing, maybe debt ratios. I know some investors, well, like Doug had mentioned, Chase, 20% down, 700 score. That's kind of extreme, but I know we tightened up our credit score requirements. Right now we're not doing under a 640 score. Because of the RN investors that we sell to. So tightening of restrictions. FHA rates did go up initially when we saw some of this hit. The secondary markets, I guess, the appetite for FHA because it's quote unquote risky. When it's, is it really? I don't know. Some of my FHA buyers are probably better than some of my conventional buyers. But so we didn't see a huge spike in rates, just guidelines more so.
Either one of you two, Doug, Perry, are you seeing a rate change, or are you see? I mean, obviously, you both see guideline changes. How's that going to affect loans coming up, or even refinancing?
Yeah. I mean, what we've seen in prime lending is we've raised our credit score requirement for FHA loans. It's not down to 580 anymore. I think it's up to 640 actually, and that's not unusual. And part of the reason for that is if the statistics that come out every month, what I saw this morning was that at this point, 10% of FHA and VA loans have now gone into some form of forbearance, and close to 7% of Fannie and Freddie conventional loans. So those numbers were as of April 30th. So we'll be curious to see how the month of May ends and how far this does go. But that is definitely going to put more pressure on interest rates and credit scores and certain loan programs too. There are certain loan programs that are more risky than others, like cash out refinances. There are lenders now that are looking at making cash out refinance rates more expensive to discourage them, because should a cash out refinance loan go to forbearance, for a lender to sell that loan to Fannie or Freddie, that's going to be a extra premium of some 5 to 7%, according to the Federal Housing Finance Authority. So even at prime lending, I just had a call this morning, Prime lending is quickly selling a dozen loans that have gone into forbearance to Fannie and Freddie to get them off the books really quickly, because they don't know how long the forbearance would continue. So you can see that the mortgage market is being upset, just as Doug had described, and the consumer is ultimately probably going to pay for this, either in lending being tightened up for lower tier borrowers, like FHA borrowers, let's say, or certain kinds of loans, like there are some lenders that have stopped doing renovation loans, for example, because of the risk involved inherently in those. Prime lending hasn't done that, but a couple of lenders have. Wells Fargo announced yesterday they're getting out of the HELOC business. It's too risky to be the second lien holder on a title. So you're seeing this ripple effect go through the market that's caused by all this. And so, what I would say to everybody is, if you don't need a forbearance or a deferral, please don't try and game the system just because you can, because you're just going to hurt everybody else and the whole economy, eventually, until we see, how this clears up over the next, let's say, 6 to 12 months. Jumbo lending is largely frozen over. There's very few jumbo loan programs left right now, really for the same reason. There's no market for them. So this has affected lending in similar ways that we saw maybe 10 or 12 years ago. I'm just hoping that the cutback will last only a very short time.
Yeah, I agree. Perry, I'm telling my clients the same thing. If you don't absolutely need the forbearance or deferment, don't even do it. I think for the realtors on the Zoom call and how this impacts you is, I think we have to educate our buyers, our clients. Yeah, this isn't a free pass. We want to control the market and not ruin it for everyone else. Like Perry described, lending guidelines could easily be tightened up, and we're seeing it across the board. Again, I haven't, but if it continues and I keep getting, the lenders on the call know this. I mean, we get early payment defaults and buybacks and all these good stuff. That causes major pain for us lenders. I'm a franchise owner. So if I keep getting these losses, I'll literally turn off the bulb and be like, all right, well, I can't get too risky either. So we'll be impacting a lot of buyers out there for our realtor partners and obviously the buyers themselves. So just something to be mindful for. Again, it's not a free pass. If you don't need it, don't do it. If you do need it, fair enough. That's why it's there.
So let me ask you, if someone does a deferment or a forbearance, obviously they're paying the money at whatever time. The part of the risk could be, depending on how you do this, they're paying it all at one time. But what are the other risks that they need to be aware of? For instance, I know, Perry, you were talking earlier that your client went to it and then said no. What made him run away from it?
Oh, he wanted to do a refinance. And this was maybe around April 10th. And I said, well, did you make your April payment? And he said, oh, no, I requested a forbearance. And I said to him, well, are you having an employment problem? And he said, oh, no, my job is fine. What the problem that he was having is that it's a 4-unit property. So he has 3 apartments and he just came off of a large renovation. So the apartments are all renovated now and they're ready to be leased. But he can't find tenants in this environment that want to come in and check out his apartments. So they're not generating any revenue. But his salary from his employment is stable and significant enough that he can make his mortgage payments just fine. So I said, well, great, if you want to refinance, you got to rescind that rescission or that forbearance deferral and make your April payment. So he went online, made his April payment before April 15th. But then when I pulled his credit report to check his mortgage history, the note is on there that Roy had talked about, that he's in a forbearance program. So now we got to get that taken out of his credit report in order to do his refinance. So people have not been fully educated as to the consequences of what they're trying to do. And I think that's probably the message we might want to get across today, is that this does have consequences. So don't do it unless you absolutely have to. It's an emergency. And I understand people have emergencies and that's fine, but just to game the system because they don't have any regulations about it is not necessarily an appropriate thing to do anyway.
So, and I'm sure the lenders here, I think we've all seen an influx of refinances, and we've been also educating our clients for the homeowners on the call. When you do a refinance, a full refinance, not an FHA streamline or a VA IRRRL, but a real refinance, we could skip 2 payments for you. I could get your escrow money refunded to you if you actually need relief. That is a smarter, better route to go. So there's no punishment, right? We don't need to worry about this forbearance being reported on your credit report. We don't need to worry about this deferment adding a bunch of stuff to the end of your loan. Let's just do a refinance. Let's not ruin that opportunity. I'll skip 2 payments with no impact to you whatsoever. So that's just a smarter move.
I'm sorry, Perry, you mentioned having to get that forbearance removed off of the credit. And Roy, you said the same thing if you have to do that. And I work with another lender where we've had conversations about this. And I understand cleaning up the credit is not happening as fast, like the rescores and stuff like that. So can you talk about what the delay might look like if you pull something like that and discover that?
I don't yet have any experience with it because I only have the one client. And so far it's been maybe 2 weeks and he's gone back to the servicer to rescind and reverse the forbearance. But so far they haven't sent any notification that they've done that. So I don't yet have a handle on how long this is going to take to reverse when they do it.
Yeah, I think the issue there too is going to be that these lenders are dealing with people that are filing for the forbearance. So what is their manpower set up to help somebody clear this up on their credit? I know some lenders, just to get a credit supplement from is taking a lot longer time on hold. So I don't know that there's that we can set a specific timeline, but it's going to take some time. I mean, it's the client I had is recent, so I'm not far enough into his getting his off the reporting off of his credit report as well. So it's tough to say, but probably going to be at least a couple of weeks.
I've encountered it and removed it twice already in the month of April. We lenders have what's called a rapid rescore. So we've had a letter typed out saying that this forbearance was not executed by the consumer. It was reported in error. We've had the credit bureaus directly go out to the lender, and then it was manually removed. So we kind of controlled it that way. That was about a 7 business day process.
Thanks, Doug.
Wild. That's wild. Okay. So Doug, you hinted on this, and that's one of the questions that I was kind of wondering on this as well. So forbearance, deferment, not the best strategy. And we might have people out there that are going, okay, I can, but I would sure feel better if I could find a way to breathe for a month.
Right.
So you mentioned one, refinance, which I think is an awesome way. If you can take advantage of it, refinance, you can get that breathable moment. Mm-hmm. Is there any other solutions along that lines, creative thinking that will help them and not completely destroy what they're trying to do and destroy themselves?
Perry actually mentioned it. The cash out refinance is another great alternative, in my opinion. If you're a homeowner that's blessed enough to have good equity, above 20%, and if I start to eliminate your other expenses, those high interest credit cards, that personal loan, maybe an auto loan payment, right now I've eliminated a lot of money on your budget. That's another way to get a lot of relief as well. I'm getting refinances done. If I get someone that says I need to do a forbearance because I need some relief, I'm going to get that refinance done. I just rather us avoid these forbearances if I can for someone, if they just need a short-term relief, right? Maybe someone's hours were just reduced a little bit and they're feeling some pain. So if I could skip a payment or two, I'll go that route. I'll get that refinance done.
Roy, Perry, you guys got anything else? I mean, I know Perry mentioned the cash out, but.
Yeah, I think I would agree with Doug. I mean, that the refinances are probably the only relief, and especially if you can do cash out. In some cases, you may be lowering your payment, skipping 2 months worth of payment, and getting you through there. Because I think the biggest concern for me is, having been through 2008, 2007, we don't know what, yeah, they say they're not supposed to report and it's not supposed to hit your credit or affect things, but we really don't know how that's going to play out a year from now, 2 years from now. And if somebody is truly in need of skipping a couple months, and Doug, great idea with cash out, Doug and Perry, is great to consolidate some of that debt. If you do have, and a lot of people do have equity, and there's still a lot of people with rates in the 4s and 5s that are out there and haven't refinanced. So I think looking at that opportunity and seeing, does 2 months give you enough breathing room? Plus you're going to get your escrow, in many cases, your escrow balance refunded to you. And that might be another month or two of payments, especially with the taxes in Illinois. There's going to be some money in there. So I think if you combine all of those, you could probably get yourself through, at least 2 to 4 months, and 2 to 4 months from now, hopefully we're back to some form of normal, whatever that becomes.
Bridget, did you have a question?
I have a question, Teresa and Justin. This is Randy. If we don't know how long this is going to last, is there a time limit that's out there on the forbearances to take advantage of the CARES Act and what they allow? So, or could they apply for a forbearance under those guidelines 6 months from now if things aren't better and hasn't improved?
You guys got it? Did you guys get that?
Yeah, I don't know that there was a time limit. The only thing that I read was that the forbearance period or deferral period can be up to 12 months. But I don't know that there was a calendar limitation on when they can wait to apply for it. I just don't know that.
Yeah, I think you're right. I don't recall seeing, for some reason, June or July sticks in my head, but I can't tell you that was for sure.
I started my career in the service division of the mortgage industry, and forbearance isn't a new thing. So regardless of COVID-19, you could always call your servicer for forbearance or a modification or a deferment of some kind, regardless of what we're dealing with right now. So that's always on the table. If it's a true need, it's on the table. Just right now in this environment, you don't even have to have any actual pain. You can literally pick up the phone, call your servicer and saying, hey, I'm impacted by COVID-19. I need a forbearance. And that servicer, 9.99 out of 10 times, they're going to say, sounds good. And they're just going to start executing it.
That's correct. That's why I was curious if there was a time limit that any of you saw on that. I know forbearance has been around for a long time. There's always solutions to help, but there's people just don't know when this is going to end for them, and they don't want to miss out on the options at the end of that, not to have to repay it all like a typical forbearance.
The other thing that I've noticed, though, maybe in a more positive note, is that purchase business is continuing. I saw some numbers in April. 51% of the loans that we funded in April were purchase business loans. I have people calling almost every day, talking about what their plans are 30 days from now, 60 days from now, how they want to start looking, they want to get pre-approved. So I haven't seen the business grind to a halt by any means. And it seems to be affecting different segments of the market, meaning that if you have a service industry type job or maybe a retail type job, then maybe that's where there's more pain right now and more job loss, as opposed to maybe more of a professional type career. But on a good note, going forward, we have a lot of pre-approvals in the pipeline. People are planning for what they want to do, let's say 60 days from now or 90 days from now, when they expect that this all will be a lot more diminished than it is today. So I think that there's a lot of good news out there. And then certainly interest rates are still at historic lows, however you want to measure that. We've been locking FHA loans, 2 or 3K loans lately at 2.75%. That's a pretty good 30-year rate to lock in at 2.75%. So there's a lot of good news out there that I'm not sure is getting through to people. There are always people that need to buy. Their families expanded. I just had a closing yesterday. They outgrew their home. They have 4 children now. They had to buy. Their job is secure, and they had to plow forward. It's just that simple. So there's a lot of good news out there that I think that we can convey that maybe isn't getting through because of all the negative stories that we see so much in the media.
How do you think we can help get that message out as industry partners? How can we use our social media, use our relationships, and as agents and as professionals in this business to help consumers feel better about what is going on outside of their maybe immediate reality?
Well, I guess it's really, the usual tools that we have, our social media tools right now. I mean, we're kind of limited. We can't really go out and do, physical lunch and learns or classes all that much. So I think that we could take advantage of maybe videos, throw out some videos on your Facebook page, LinkedIn. I'm seeing a lot of videos, seeing a lot more good news on LinkedIn than I am really anywhere else. I'm not sure it's getting through the consumers though, but certainly, utilize Facebook and Twitter and all those other things. And there are some good articles that pop up now and again that talk about how the purchase market isn't dead, that people are still out there looking. I'm seeing open houses where they're doing one appointment every hour, one person only. So there's a lot of creative things going on the realtor side. And there are a lot of buyers out there that have to buy. Their family grew or they outgrew their house. They want to move to a different school district. And interest rates are going to support that. Interest rates are going to be low probably not only this year, but probably through the end of next year as well. So there's never really been a better time, provided your personal situation is secure. But we just, Teresa's right. We got to find a way to get that message out, because there's a lot of good news that's being buried every day in all the bad news that's more dramatic and maybe makes more money for the media to report. I'm not sure. But there is good news out there. And there is purchase business out there. There are buyers out there. And there are people who have to sell their property because they're moving on. Their family got bigger. They want to go to a different school district, whatever the reason. And those are the people that we really need to reach.
Yeah, I think one thing I've done is a lot more phone calls, a lot more reaching out to the past clients, sphere of influence, where I'm doing Zoom meetings, virtual coffee appointments with agents just to update them on what's going on in the markets, what's going on the mortgage side, and different requirements that may be changing or updating. But reaching out to past clients, I think, has been my biggest thing, to let them know that, hey, to find out, how are they doing, and the market's still going. People that are out there looking to buy a house right now are serious buyers. Just like in the middle of winter with 12 inches of snow, if somebody's looking at houses, they're serious. So I think that's, first, from a seller standpoint, it's good to know that if somebody wants to look at your house, they should be really very serious. They're not a tire kicker out there looking at places. So I think just being more positive, especially on social media, Facebook, etc., coming from a positive standpoint, and just reiterating. I know some agents will do a lot of posting for, just close this client. I think now more than ever that's important, so that people visually can see it and can process the fact that, hey, the market really hasn't stopped. We're still, selling houses. Maybe you don't have these huge mega open houses anymore, but some agents I know down here are shifting to virtual open houses where they'll do a 20-minute walkthrough, answer any questions, and then they'll do another 20-minute walkthrough, and then they schedule one-on-one virtual walkthroughs with people that want to see further into the house. So it's just, I think we've had to get a lot more creative with the changes, but I think the bottom line is just staying in touch with everybody that you work with or have worked with.
And maybe Teresa can speak to this, but what we've shifted to is e-closings, meaning that yesterday at a purchase closing, for example, so in the morning, the borrowers e-signed or docu-signed most of the documents before they even went over to the title company. And once they got to the title company, all they needed was to sign their notes and their closing disclosure and a couple other pages. So their time or their exposure, you might say, was very, very limited at the title company. And maybe Teresa can talk a little bit more about that, because that's maybe if people have fear, there shouldn't really be that fear right now, because so much can be done online. And hopefully we'll even have remote online notarization everywhere pretty soon. I wouldn't be surprised if real estate closings become virtual in the future.
Well, and that's an interesting point that you bring up, Harry. I think that there is certainly is a movement towards digital, some form of online audio, video notarization, which we kind of briefly talked about last week. To give some perspective from where I sit at the title company end of the world, we do have a couple of very large national lenders that will absolutely not allow what we call RON, remote online notarization, or AVON, audio video online notarization closings. They still require wet signatures on their entire package. Then you compare that to a couple of other lenders, particularly on refinances, where they're allowing nearly an entirely online platform. I believe that that may differ with investors. Some investors still want a wet signature on a note and on a mortgage, or on a handful of documents. But for the most part, you can get a lot of the package done digitally. I know that, for example, one of the closings that I did yesterday, it was a purchase, and the closing package was divided into two. And at one point it stopped with a big flyer that said the documents beyond this point potentially have been e-signed by the client. Check when they get in. So I checked with the client, who said, I don't know what you're talking about. I checked with the lender, and yeah, they've never clicked the email that they got that morning with the documents. So I think a lot of lenders are truly trying to make this as simple as possible for consumers. But part of the burden is they're not as familiar with it. So they really almost need someone to help pull them through that process, where I'm sure that had they have realized they had that closing package, well, I shouldn't say that. Given the specific borrowers, they may not have pre-signed because they didn't care. They came into the office, there were no masks. They didn't understand why I wasn't in their closing room. There are people who understand the climate that we're in, and there are others, and God bless them, we make no judgment, but there are others who have less of a grasp of just the COVID environment that we exist in. So back to the digital platform, we embrace that. I know I can tell you that on a seller's side of the transaction, we now offer a complete digital seller signing. We'll have a witness on staff. So I would do them right here, just like we're doing now, but on a secure end-to-end encrypted video audio, where the seller's attorney, the clients, and then I and a witness from my office will pop in to do the power of attorney. Then the witness goes away and we'll execute the rest of the documents. So the sellers literally don't have to come in. We will have express mailed the original documents to them with a return FedEx package. They would send those back. It's typically done a few days prior to closing. And then we keep those originals until it closes. If it reschedules, like we had one that was scheduled to close this past Monday that just was postponed, and I think it's closing today, we just, again, hang on to the originals until it closes. So for the sellers, we truly have given them that remote access. From a buyer's perspective, so much of that depends on you as a lender. And Perry, I know your lender, you mentioned you'll allow some digital. Roy and Doug, do you have some digital platforms as well?
Just on the refinances, like you mentioned.
Yeah, just refinances.
Okay. And I wonder if we're not going to be moving towards a platform where lenders might allow more digital signings. I know that now that we all have a mask policy, I took mine off for the sake of the video, but I suspect fewer people are going to want to come out. And so I know that we're exploring, and we're always willing to talk about a digital platform for buyers and or sellers to sign, but it does take some buy-in in the lending world. And even if it's, as Perry said, some of the package, it can minimize just the time of exposure and the documents. We had one client, I won't say which office, but we had a nurse that was purchasing yesterday. She works on the COVID floor in a hospital, and she just got over being sick, like very sick. So we weren't thrilled that she wanted to come into the office and close. And we were able to work out a scenario that made all parties happy, but it also involved because that the paperwork, the copier that you're now running the paperwork through, everything that touches is potentially contaminated. So you literally have to clean the gloves, switch gloves, spray down the printer, spray down the copier. You are working a lot harder to make sure that that exposure is minimized so that it truly is meaningful to save. Perry, like you said, if you can do 2/3 of your package digitally, that's fabulous.
Yeah, at Prime Lending, we've gone to e-close. We were going to do it anyway, and I think this whole situation just sped up that process. But we've gone to e-close on almost every loan type now. So the borrowers have to be coached, though, that they have to look in their email the day of. We can't even send it the day before. So the morning of the closing, they will go in and e-sign most of the package. It gets time-stamped. And then when they get to the title company, there's a very minimal amount of paperwork that needs to be wet signed. And really part of the reason for that is the pushback on the part of the servicers. The servicers in this country still are pushing back, and they won't accept a fully remote online notarization scheme or a fully e-signed package yet. But I think they're going to get dragged kicking and screaming real soon into the 21st century. And I think it's going to be great because then we can do our closings basically through Zoom like we're doing our meeting today. I mean, I think that's the future that is coming at us very, very rapidly now. I know in Illinois, the governor signed an executive order about a month ago allowing remote online notarization. I've heard that there's legislation bouncing around Congress on a national level to authorize it. So it's just a matter of time. It is coming. So the servicers are going to have to, just get dragged kicking and screaming into this new world. And, you'll see a lot of business changes because of it, just like we're sitting here on Zoom today. 3 months ago, 6 months ago, we probably wouldn't be doing a Zoom meeting like this. But it works. And the same thing for the closings. So we're trying to minimize everybody's exposure, like Teresa had said, in her offices. And so the way to do that is to do an e-close package from the lender. And more lenders are going to this. It's not just, Prime Lending, and it's not just because of the COVID situation. There's been this pressure for some time now to go to an e-close situation, even on a purchase loan, as well as a refinance. Does it always work well? No, I had one blow up about a week ago because the borrower didn't understand that he needed to log on to the link and do his e-signing. And the notary from the title company that went to his house to close on the refinance didn't have any idea either. So she just gave him a limited number of pages to sign. And then a few days later, when we're trying to fund the loan, we discovered that he had never e-signed. So we had to do the whole closing all over again. So the system maybe has a few little glitches still to work out, like maybe a notification if somebody misses their package. So it's just a learning curve for both us on this side of the business and for the consumers on their side. But everybody's used to doing DocuSign in real estate. They usually DocuSign their sales contract already in most cases, I think. So it really shouldn't be that much of a leap for people to go forward with this.
Awesome. We got about 10 minutes left, so I guess what we can do, and Bridget already jumped on, but she left now. Does anybody else have any questions for anybody else in here? For Roy, Doug, Perry, anybody in here?
I have one question. If we do run into, whether if you're an agent and it's clients that have questions or consumers that have questions, where do you recommend they go? Should we put them in touch with someone like you? Do you send them to a website? Where do they go to get these honest answers from someone who can help them?
You mean on forbearance, or are you talking about something else?
Well, I think whether it's forbearance or whether it's, someone's talking to a friend on, their Thursday or Friday happy hour, whatever it is, and someone happens to mention how tough things are. And if you can offer and you want to guide them to somewhere where they can get real and accurate information. But as someone who's not in the lending world, where do you send them? Is there a website that you send them to? Do you just put them in connection with someone like you, or any of the three of you that would be able to answer those questions? What do you recommend?
Well, when someone calls me or has some interest in forbearance, for example, they really need to call their servicer directly or email their servicer. They can always find that phone number on their current mortgage statement. In terms of knowing what their rights are and how the CARES Act has been set up, the CFPB has an online guide for that. So I would recommend they go to the CFPB, the Consumer Financial Protection Bureau, to get general information. But if they want information specifically on their situation, they really have to call their servicer, and that's the phone number that's going to be on their mortgage statement. It may not be their original lender. It may have been sold after a few weeks or a couple months. So usually lenders will get notification that servicing has been transferred for all their clients. So I have a list of who the servicers are for all my clients that have closed in recent months. They can always call me if they want to find out who's servicing their loan and they don't realize who it is. But generally, they should start with their mortgage payments or their mortgage statement they have every month and start with the phone number there, is what I would say.
Thank you.
I like phone calls. The human touch, I'm always available. For me personally, I know we all have different platforms, but for me, I like the client to call me and I like to walk them through and I could point them in the right direction directly.
Yeah, I would agree with Doug. At least a call to us, maybe we can figure an alternative or figure out a game plan and find out before they jump into the forbearance. You know, at some point they may make that call to their lender, but maybe we can work something out that makes sense for them, not having to go through their lender with the forbearance or deferring payments. So.
Thank you.
Perfect. On that note, I don't want to blow the opportunity since I didn't introduce you guys very well at the very beginning. Why don't you three, I'll start with Perry since down the left, just, you know, introduce yourself, tell me who you are, who you're with. I mean, we already know who you are, but tell me who you're with and any way to contact you that you prefer.
Yeah, sure. My name is Perry Farella. I'm a loan officer with Prime Lending. You can contact me by phone or you can go to my website, perryfarella.com. My phone number is 773-248-8422. Always happy to answer questions. You know, on any of these topics, it's not a problem or a bother, and we're always here to help everybody, so we're here to answer questions.
Awesome, thanks. Roy, how about yourself?
I'm Roy Paeth with Success Mortgage Partners. I lend in Illinois and in Tennessee. You can reach me, easiest way to reach me is by cell at 630-670-1594. Here to and happy to answer any questions you've got. If you want to relocate down to Tennessee and looking for some great places to live, love to introduce you to a great agent down here if you have clients relocating and vice versa. So I appreciate the opportunity today.
Last but not least, Doug, how about yourself, sir?
Doug Benavides, Cross Country Mortgage here in St. Charles. I lend coast to coast. Like all lenders, our refinances are through the roof. So I'm doing something that is probably taboo. If anyone is looking to refinance, I'm not even going to pull your credit. I'm not going to waste any time. I'm going to tell you your scenario to see if it's worthwhile, and then we'll move forward. But yeah, I'm always here to help. Whether it's a client I'm working with, call me, use me as a resource.
Awesome. Anybody else? Any last questions before we call this a day?
Thank you, everyone.
Yes,
Thank you for
this is
Great.
for
Thank
doing
you.
that.
Thank you, guys.
Thanks,
Thanks, you
Teresa.
three.
Have a great day, guys. And thank you for
Thank
your
you.
time, gentlemen.
You
Have a
too.
great week.
Bye, everyone.
Thanks. Have a
Bye-bye.
good one.
Closing.
Good day.
Here's what I'm going to do. We're going to pause.